Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report, and we can read the synopsis on top. Volatile ranges have taken hold in the euro dollar and pound dollar, and will probably last into next week, perhaps a bit longer, before terminal thrusts into fresh lows. So let's go ahead and pull up the charts. There are a lot of charts that I want to get through tonight. The first chart is the euro dollar, as Jamie mentioned. The pair could be a range trading candidate before a thrust to new lows. Over the very short term, right now, there could be an inverse head and shoulder pattern forming, but again, this is a very short-term, low-confidence pattern, and we can see actually as I'm speaking right now, prices are taking out that right shoulder. But I might keep an eye on this for the next hour or so if prices can hold or close back above the level of the left shoulder, and that's where the pointer is right now. So that price area here, this would be the left shoulder, this would be the head, and this would be the right shoulder. One of the reasons that I like head and shoulder patterns is that they can give you precise entry levels, and this level at the 126.64 area would be one of those precise levels. And another main benefit is that you can exit the trade immediately if your analysis is negated, and that could be happening right now. Right now the time is 8:20 Eastern Standard Time, so I would judge this potential pattern on the ability for this candle, the hourly candle, to close back above the level of this left shoulder. And again, to remind you, that is a short-term trading opportunity, so you have to abandon your analysis right away. The next chart is the dollar yen, as this is the resistance line that I've been using. It has to be for, I think, the last 10 reports. We can see it clearly acted as resistance, and then after the breakout, it did act as support as well. And I mentioned in yesterday's report that I was having less and less confidence in this line acting as support, and we can see that it did bounce a few times off the line, but now with a close beneath the line, we can see, I would consider this, at least a short-term breakout. And as Jamie was mentioning in his report, the next level of potential support is the 96 figure, so that's what we might look for now. Next chart is the euro pound, as I was mentioning, to have a slight bearish bias against the high of this candle wick right here, which is 81.95, and I can go ahead and change the chart style so you can see that a little better. That would be this candlestick right here, 81.95, and we can see that prices have been contained by that high so far. We haven't really seen a major reversal. There was on this candle here, but then prices were able to close back above it. So again, nothing's really changed in my analysis. I would still maintain that slight bearish bias, and if you get an opportunity to take some profits, like on a candle such as this, let's say we get a movement down here of 100 pips or so, you might go ahead and take some profits, again using that 81.95 as your basis to place your stop just above that level on the short trade. The next chart is the Kiwi dollar, and as I was mentioning yesterday, this support line did in fact fail, and we can see this is another good example of once a support line being broken, it acts as future resistance, and the pair is selling off right now. Just looking at this pattern here from where my mouse is now over to the right, it does look corrective. This could be the third wave of a C pattern that we're experiencing right now, and in Jamie's report, which I would recommend keeping an eye on with this pair, there could be a very good bullish opportunity that will present itself over the next couple of days. So this is something that I definitely keep on the radar. Jamie was mentioning in his report the 57.40 area, which is the 50% fib, and this low over here that I'm pointing at right now. So that's something that we can look at moving forward, that 50% fib. And in terms of risk reward, possibly placing our stop a little bit below that 61.8. That is taking a little too much risk in my opinion. So definitely keep an eye on that 50% fib. Maybe try and get an entry near there and place your stop just beneath it. Ideally, what I like to see, and we can see prices are coming down now in terms of Fibonacci tests, is for the first test to actually penetrate the line and then have a close back above this. This is the hourly chart, to have a close back above the fib level, and then you can enter and place your stop beneath the low of the first test of the fib level. And this concept is reviewed in the Fibonacci presentation that's located directly above the report that you're viewing right now. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.